Welcome back to John Orfer's Note. It's over again this week to Super Mario Draghi, the European Central Bank President. The Eurozone's been safe from immediate collapse, but growth is exceptionally weak and unemployment's rising and inflation is way below the ECB's target. With me to discuss what the ECB could do at this week's meeting is Julian Callow, who's the Chief International Economist at Barclays. Julian, there's lots of charts we could have chosen to illustrate all the troubles we have in the Eurozone. You've chosen this one. Tell us about the problems for small businesses.
I think it's a very interesting chart, Ralph. This is a survey that the European Central Bank conducts every 6 months, and it just came out last week, and they go out and ask 7,000 small and mid-sized companies what kind of access to finance they're finding across the euro area. And you can split it up by country. And what I'm showing here is the success rate for loan applications. So if a company did apply for a bank loan in the last 6 months, what did it actually get? Did it get everything that it asked for? And in Germany, you find the figure is 85%, whereas at the other end of the scale, we have Greece at 25%.
Big split, in other words.
Yes, so this illustrates one of the key challenges for Mr. Draghi and for the ECB right now, which is how do you try to channel bank financing through into the smaller corporate sector firms?
In other words, it's not just weak growth, it's a serious structural problem.
There's a real asymmetry here, which is very much, I would say, a reflection of the different problems in the banking sector that you have, and that in turn reflects underlying economic conditions. So it's really catch-22 for companies in Southern Europe.
And presumably the countries that have easier access to credit are doing better economically, performing better.
Well, that's right. And it's very clear from the ECB perspective that 2/3 of the financing of the corporate sector is coming via the banking channel. And what's more, the ECB says that most of the new job creation comes about through small businesses. So I think they're very keen to try to get the plumbing to work better. Particularly, you see at the bottom there, we have Spain, Ireland, Greece, where it's very restricted.
So what can the ECB do? Everyone's talking about a cut in interest rates.
Yeah.
You think that's
a cut. I mean, let's face it, there's not a lot of room really to cut interest rates. We have the main refinancing policy rate here at 0.75%. We think it will be cut by a quarter point or so, but it's not going to have a huge amount of impact, perhaps a little bit of positive impact on sentiments.
Let's call up our second chart, which shows what central banks around the world have been doing. And this is showing the asset purchases by the Fed and the Bank of Japan more recently, forecast to shoot up in Japan's case. ECB behind the curve?
Well, that's right. I mean, here, these green circles are showing us the Bank of Japan securities holdings, and they've already risen, you see, being back at 20% back at the start of last year, moving up to 30% right now. And we think they'll get up to 45% of Japanese GDP by the end of next year. The Fed is doing quite a lot here, but the ECB, in contrast, is well under 10% in terms of the holdings of securities.
We don't expect them to announce bond buying, though.
Well, no. I mean, this is QE. This is pure quantitative easing.
So what's the ECB going to do?
The ECB has, of course, big issues with bond buying. There are statutory limitations, and there are also differences of opinion on the governing council. So it can't really go down that route. What other options does it have left? Well, it's going to try and improve the financing and particularly help banks to actually submit SME loans as collateral. So even that is going to have a fairly limited impact. I think there might be an argument for adopting more explicit forward guidance. I think the ECB president has in recent weeks suggested some affinity.
Like the Fed does.
Yes, that's right, and give some kind of commitment that rates are going to be kept low for some longer period of time. The other issue is to do another big refinancing operation and to target that at the SME sector. Really, and have it of a longer maturity.
Julian, thank you very much.
Okay,
so a few options there for the European Central Bank when it meets on Thursday. Let's see what they actually do.